Welcome to the deep dive. Today, we're looking into Bitcoin, specifically some interesting signals from government-related players about its future price.
Yeah, we're digging into a Standard Chartered report from May 20th, 2025. The analysis is from Jeff Kendrick, their head of digital assets research.
Right. And our goal here is to sort of unpack why they're floating this um, huge $500,000 Bitcoin prediction and how these government entities fit into that picture. So lay it out for us.
Okay, so the headline prediction is Bitcoin hitting $500,000. Standard Chartered thinks this could happen before the end of the current presidential term, so early 2029.
Wow, that's a big number. What's that based on?
Well, it does assume a couple of policy changes, like repealing SAB 121, that's the rule making Bitcoin custody tricky for banks, and also the idea of establishing a strategic Bitcoin reserve.
Okay, so that's the forecast. But what are they seeing now that makes them so bullish?
The core argument really hinges on Q1 2025 activity. They saw increased indirect Bitcoin exposure from government-linked entities. They see this as a key sign of widening structural demand.
Indirect exposure, meaning not buying Bitcoin itself. And who exactly are these entities?
Right, not direct buys in most cases we'll discuss. For example, several U.S. retirement funds, California, New York, North Carolina, Kentucky, they all upped their stakes in MicroStrategy.
MicroStrategy, MSTR, the company that holds a ton of Bitcoin, right?
Exactly. Their combined increase in MSTR shares was equivalent to about 1,000 Bitcoin.
Interesting. So it's through a proxy company. Anywhere else doing?
Oh, yeah. The report mentions South Korea's National Pension Service, the Swiss National Bank, Swedish pension funds, even a state-owned bank in France, and the Saudi Central Bank.
So quite a global spread.
Definitely. All told, about 12 government-related entities increased their MicroStrategy holdings. It represents something like 31,000 Bitcoin worth of shares now.
Okay, so why MicroStrategy? Why not just buy Bitcoin directly, or maybe these new ETFs we hear so much about?
Good question. Standard Chartered suggests it might be down to regulations. Some jurisdictions might have rules preventing these specific entities from holding Bitcoin directly on their books.
Ah, I see. So MSTR becomes a workaround, a Bitcoin proxy, as they put it.
Precisely. It could be a way to get skin in the game without navigating potentially complex direct investment rules. Maybe a sort of a first step.
But is it all indirect then? Are none of these big players touching Bitcoin ETFs directly?
Well, that's where it gets a bit more nuanced. The report actually called the initial direct ETF holdings by sovereigns disappointing. Yeah, for instance, the state of Wisconsin Investment Board, they apparently sold off their entire Bitcoin ETF position. That was equal to about 3,400 Bitcoin.
Okay. That seems to cut against the grain a little.
It does. But on the other hand, you have Mubadala Abu Dhabi's Sovereign Wealth Fund. They actually increased their direct Bitcoin holdings slightly in the same period, from 4,700 up to 5,000 Bitcoin.
Okay, so not a completely uniform picture. Some indirect via MSCR, some direct buys increasing, some ETF sales.
Right. It supports the overall theme of growing institutional interest, just maybe happening through different channels depending on the entity.
And how are we tracking all this? How does Standard Chartered know about these MSTR holdings?
That brings us to 13F filings with the SEC. These are required quarterly reports for big investment managers, anyone handling over $100 million.
Got it. So they're basically a window into what the big money is holding.
Exactly. As the Bitcoin market matures, these filings are becoming a really key way to see how institutional players are entering the space.
So let's connect this back for everyone listening. Why should you, as someone interested in finance or future trends, pay attention to these kinds of, well, seemingly niche institutional movements?
Because it signals a potential shift. When you see government-linked funds, entities with very long investment horizons start getting exposure, even indirectly it suggests Bitcoin is being viewed more seriously as a potential asset class.
It's moving beyond just individual investors and tech enthusiasts, maybe.
That seems to be the implication. This kind of institutional interest, if it continues to grow, could really underpin future adoption and, well, potentially support those higher price predictions.
Okay, so to wrap up, the key takeaway seems to be this growing, albeit often indirect, investment in Bitcoin by various government-related entities worldwide, tracked mainly through MicroStrategy holdings via SEC filings. This trend adds weight to optimistic forecasts and suggests broader acceptance is underway.
That sums it up well, and it leaves us with a pretty interesting thought, doesn't it? If this is how governments and large institutions are getting involved now, What other, perhaps unexpected avenues might they explore for decentralized asset exposure in the future?
Right. And what would that mean for the rest of us, for individual investors and the whole financial system?
Yeah.
Definitely something to keep an eye on.